Good afternoon. It's 11:40. I apologize that you guys are all late coming in. It looks like for some reason I no longer have to admit you guys. You guys are just flying in. So that's great. We're probably going to have 1,000 of you by the time we're done. I'm hoping I can help you guys with some questions you may have on investing, finance, stocks. If you're juniors, sophomores, and freshmen, you probably can't do much but learn a little bit today. If you're seniors and you're turning 18, you could probably start looking into investing with accounts. Got 118 of you guys already. Wonderful. You're all muted because I don't feel like having 150 people yelling over each other. If you want to be allowed to speak, just type it in the chat window. And then I can unmute you specifically if you have a conversation you want to have. Okay? If you just have a question, type it. If it's in depth and we actually have to go back and forth, then let's see if we can unmute you. Now, Chris Miku is asking a question. I read online I can invest in stocks before I'm 18. Is this true? The answer is no. For a personal, Dennis? Okay, let's do this first before we get started. Guys, I do not need other kids answering other kids. That is a scary situation to find yourselves in. That is how you get misinformation. Okay? What you guys read on a message board once and you take as fact is scary to pander that and share it. So, let's go back to Chris's question again. Please be cautious when you guys are sharing information. All right? This topic is single-handedly the scariest topic to discuss because everybody thinks they're smart. Everybody thinks they're the smartest person in the room. Everybody thinks they can give the best advice. Okay? That is very scary because not everyone knows everything, but also what you know and what you're explaining may be different. Even your stock advice. Let's say you guys are giving each other stock advice. Well, if this stock advice is good for one person, it might not be good for a different person. So I have to preface anything we say that I'm not giving you specific advice here today as a fiduciary. I'm not here as a financial advisor. I'm here as an educator that can hopefully give you some advice that you can use to start researching on your own. But I will not allow you guys in this chat to start giving each other advice as children to other children. If you want to do that, you guys can do that separately. I can't allow that discussion to take place. So I'm going to go back to Chris's question first. All right. Can I invest in stocks before I am 18? The word he used is I. The answer is no. You cannot have what's called an individual account until you are 18. If you're 17, if you're 16, you can have custodial accounts that a parent, guardian, or somebody above the age of 18 opens for you. So that's the first thing. Can you open an individual account? And I'm going to get a whiteboard out so I can write some things down. Can you guys see this whiteboard? Yes. Okay. So number one, no if you're not 18. Unless you can have a custodial. Okay? Your parents can also do what's called a 529 college plan. Okay? So there are ways you can have access to investing. But again, Dennis, that's why the question is so important, and reading the question. The question was, can I? The answer is no. You personally cannot. You cannot own an individual account under the age of 18. If you are under the age of 18, a parent or relative can open an account. However, they have to be the ones that put money into it. They are the ones who make the account. They are the ones who have access to the account. If you access that account, no, Dennis, that is not the purpose of the account. A custodial account is not designed for a minor. That's the problem. A custodial account is not designed for a child to have access. It is the exact opposite of that. A custodial account will allow you to, yes, Arthur, exactly. It will allow you to transfer ownership to the child when they're of age. However, they didn't create custodial accounts because they want 16-year-old kids buying and selling stocks and bonds. That is not why they made it. They made custodial accounts because they realize there are parents or uncles. I'm an uncle. I have 2 nephews and 1 niece. I opened them all custodial accounts. They do not have access to that. I'm not going to give an 8-year-old child and a 16-year-old child access to a custodial account to lose and make bad decisions with all the money I invested for them. That's not the purpose, guys. The purpose of investing is to do what? If you can give me one phrase, what's the purpose of investing? That is the purpose, to build wealth. You cannot build wealth by taking crazy, stupid risks all the time. And let's be real, that's what kids do. You have to be extremely cautious in what you're doing. So the custodial account is designed for an adult to make an account for a minor, to give them access to equities, stocks, bonds, ETFs, other investment vehicles, so that those investments can hopefully make money. So if you invest $1,000 into your nephew's fund at 15 years old, by the time they turn 18 years old, you hope that fund now has $2,200 in it. Right? Like I bought Apple for my nephew. He's got like 3 shares of Apple. I bought him Apple 3 years ago when Apple was worth like $140. Great news. Apple's now worth $270. So he made $130 per share. Now, if I gave my nephew access to that money, he might sell it and go do something stupid with it. So I'm not giving them access. So custodial accounts are not built to provide access to children because children do children things. Right? So could you get access? Yes, I could give my niece, who is 17, the login. I can do that. I can give her the login. If you want your parents to make you one at 16 years old, yes, they can make you that account and give you access. However, if they do that, they're assuming all the risk that this money can go to zero. Now, Arthur's question, is it legal? I mean, once you make an account, who you give access to log in is up to you. Right? Like I made the account for my niece. If my niece Emma, who's 17 and she'll be a senior next year at a high school, if I give her access to her account, like, and she does something bad with it, then whatever, she lost all her money. But I'm not going to do that. I will not do that. So, any questions on custodial accounts? So if you're under the age of 18, you can have a parent or guardian or cousin make you a custodial account, but that is normally made for someone else to manage. That is not really for you personally as a child to manage. If they give you access to managing it, great, good for you. But that is not what they're designed to do. Okay. You'd have to check with your vendor. You'd have to check with TD. I have mine with TD. I believe the age is 21. I'm not positive on when I can transfer the account over to her. So, Omar, you'd have to do some research. You guys would have to do some research on that custodial account. If it can be 18 or 21. So, the next question, where do you open an account? Robinhood does not have custodial accounts, so you can't open it there. You can open a TD account. So I have a TD account for my niece and my 2 nephews. Mine is TD Ameritrade. Okay, you can use TD Ameritrade. You don't have to. You can use, JP Morgan, Citibank. I'm pretty sure that any major financial services company or bank can do that for you. If you're 18, they can help you open an account. If you're under 18, you would need the adult to be the one who opens that account. So, Tyler's question. Distinguished types of investing to help everyone forward. Okay, so when investing, there's a few things. No, my gosh, you guys have like a billion questions. All right. When investing, you can invest in stocks, bonds, ETFs. You can invest in mutual funds. You can invest in options trading. There are a few types of investment strategies. The key investment strategies are buy and hold. That's what Mr. Power does a lot of. I buy and hold. I've been buying Apple since 2007. I've been buying Visa since 2012. I've been buying PayPal since 2013 when they spun off from eBay. Okay. I've been buying a stock called WSC since I had somebody that is a big investment banker recommend it to me, right? So I buy them and I hold on to them. I haven't sold much at all. The other types of investors are investors that do options trading, where they try to kind of time and day trade and swing trade and trade in and out of the market very quickly. That's a little scarier, okay? Your first thing you should do before you do anything is have a savings account. So if I were to give you an order of things that you should do, number one would be have a savings account. That's number one. Does anybody have a disagreement with that? William, savings accounts have low returns, but savings accounts are the safest place to put your money. You need liquidity as someone turning into an adult. Yes, Haley, high liquidity. You need to have access to your money. You need to have access so you can pay off your college debt. You need to have access in case you have to buy a Metro card. You need access to everything. If you buy bonds, Arthur, you don't have them. I'm not saying don't buy bonds. I'm not saying don't buy bonds, guys. What I'm saying is, as a child, your first goal should be saving money. it shouldn't be risking money in the stock market. Hold on. Let's do this. There are 209 of you here. I am the smartest person in the room. We're not going to debate that. We are not going to discuss or argue that. I am the smartest person here. The biggest mistake you can make is not listening to what I'm going to tell you right now. The first place to put your cash, your check from work, the money you might get from friends or family from graduation, the first place it needs to go. This is not negotiable. Do not question me. Do what I say. That's all I'm asking. Thank me in 5 years. Thank me in 4 years. Thank me in 10 years. Just be quiet and do exactly what I tell you. That's important. I always listen to the smartest person in the room because I am never that often the smartest person in the room. I listen to those people. You have to listen to those people. I am that people for you right now. That's why I'm here. So I will, Mr. Seiler, good morning, brother. I will stay here as long as you guys want today. I got nothing else to do. I got coffee, I got vitamin C, and I'm good to go. But you have to listen to the people that know more than you. I listen to those people. You have to listen to those people. And if I'm not sure of what it is, I will promise you I will not say it if I'm not positive. Okay? The first thing you guys have to do is, please, it's a savings account. God forbid something bad happens. God forbid you have to buy a car. Let's say did you guys know that if you drop out of school within 6 months, you have to start paying back your college debt? Bet nobody told you that. If you don't have any savings and you have money tied up in bonds or you have money tied up in stocks that go down, you don't have liquid cash to start paying bills. Let's say you get pregnant or you get somebody pregnant. I'd like to think that you have a savings account that you've been saving money. Life happens very fast. The first thing that you have to do is not worry about yield. Don't worry about return. Do not worry about yield and return. The first thing you have to worry about is you have money just in case. All right? And I'll even draw you an emoji. What does that look like? Don't say it because you're probably going to curse. All right? Just in case that happens. You have no idea, guys. Got to be careful. Got to be careful. All right? So your first thing is your savings. Then you can start creating an investment portfolio. An investment portfolio. Your investment portfolio should be money you don't need. Money you can, ready for this? And this is how I built a little bit of wealth. Money you can pretend doesn't exist. All right. So I'll give you an example. How many students do I have here from VE? Where's my seniors? Newman, Tyler, I saw you. Frida's here. Great. James. Oh, great. Okay. So if I were to tell you guys as a class, juniors, seniors, whoever the heck you guys are, I don't care who you guys are. If I were to tell you the breakdown of savings to buying and holding, I would probably go 60, 40. Put 60% of your money in a savings account, just in case crap happens to you and you need that money. Just in case you want to go out with your girls or you want to buy a suit because you have an interview coming up, you need cash. 40% of your net worth you can start putting into a savings. You can start putting into investments if you want. That would be an average good ratio. Now, it might be different for different people. Some people have more or less money. If you have 100 grand to your name, you probably don't need 60 grand in a savings account right now as an 18-year-old kid. Most people probably don't have 100 grand. Maybe you have like a few $100s or like $5,000. Well, if you have, let's say you have 4 grand because you work, I would keep like 3,000 in my savings and put 1,000 towards some stocks. I wouldn't put 4,000 in stocks because what if you need that money, right? You guys have to make smart decisions. You don't want to go into debt. You don't want to have to use a credit card. Okay? So questions on that. This is 1, this is 2. Number 3 could be risk. Number 3 could be where you have some risk. So number 3, if you're at the point where you think you can start taking some risk because you've done the research, you don't want to just start throwing good money at bad ideas. You need to do some research first, guys. So if that's the case, then maybe you do 55 savings, 35 buy and hold, and 10% can be risky. So example, 55% go into my savings account. 35% goes into Apple, Google, PayPal, Visa, Home Depot, whoever you want. And then 10% you can play however you want. And then that's where you take your crazy advice from people. Is Motley Fool good for advice? Alexander asks. You guys have to do your research. Just following what I say is not going to be good enough, and just reading one article will not be good enough either. Everyone has a bias. Everyone has a bias. Okay? What I will tell you is this. There is a book by the CEO of a company called Creative Planning. It's called, oh man, where is it? Hold on. I will share my screen and find it for you. They sent me like a few hundred copies last year to my seniors. I'm sorry. I have like a box of them at school that I couldn't give out because we're not allowed in. Creative Planning, mistakes investors make. There we go. This is the book. 5 mistakes every investor makes. Pretty good damn book, honestly. And my internet's unstable. Where's the picture of the book? They don't have a photo of it. But that's the title. 5 mistakes every investor makes. Great book, great read, super easy to understand. Okay, so Sebastian, thoughts on ETFs? How long? The book will probably take you a few days to read. It's probably a couple hundred pages. Very easy. You can probably find it on Amazon for like $10. Okay. So now we're getting into a lot of questions. Okay. About about real investment strategies. So before that, Omar said, for legal obligations, what if you don't have parents and are still a minor? I've also read emancipated children can have adult rights socially and financially, but what? Emancipated children can have adult rights. I don't know enough on that, so I'm not going to speak on that. That involves more personal research on you guys. Call your local bank, do some searching. I don't know enough of that, to be honest. So I don't want to tell you something and it's wrong. So I'm just going to digress and move along. All right. An ETF is a fund that has access. And here's the question. So let's look at the fund. So the SPXL is the ETF. Let's open this up. This is the S&P 500 bull 3x shares. This is an investment vehicle. as is the SPY, as is the SPX, as is AAPL, as is anything, right? Is this a good investment? I can't tell you. That's up to you guys to make that educated guess. I'm not going to recommend specific stocks or ETFs or mutual funds. I'm just not going to do that. Okay? I'm not your advisor. You guys can do that research. My suggestion is to research what they have exposure to. Okay? Read about what you want to invest in, and then look at what they are invested in. Right? So you're actually going to have to access some of these ETFs or mutual funds. What these are is a pool of funds, and we discussed this in VE. So if you're a junior interested, you need to apply for VE for your senior year. That would be something you have to do because this is some things that we address. So an ETF would have a number of stocks that it's exposed to, and you would buy this fund called SPX, or let's go SPYD. All right. So how do we apply to VE? Here's the link to apply if you're a junior. I need these applications by tonight, by midnight, because I have to send over names to guidance tomorrow. So if you are actually a junior interested in VE, you need to do this application tonight. Okay? Now, outside of that, Millie asked a question. When we turn 18, you would suggest to start investing up to 40% of our money into stocks. That is a possibility. I don't know everyone's financial situations. What I wouldn't do is probably put 100% in a savings account. And what I definitely wouldn't do is put 100% in my investment account. 60-40 is an average split that a lot of people use, 60-40. Okay? I can't give you guys specific numbers for yourself. For some people, it might be 50-50. So some it might be 80-20, 80% in your savings. The application is not first come, first serve. But if you don't apply, you can't get in. I will go through all the applications tomorrow. So I need them done tonight. Okay, so other questions. I've got some of my VE students here. Some questions that you guys might have. Everyone's here for a reason. Dutch Atelier, what's your question? Newman, Trita, Rich, Aaron, anything sticking out in the back of your mind? So somebody did mention the Fed. So if you guys follow what's been happening, you would actually see what Powell did today. So Powell, Jerome Powell, the Fed chair, rolled out $2.3 trillion in stimulus today, an additional $2.3 trillion. The market's up today. The government has now promised more than $8 trillion into businesses and into investment vehicles to try to prop up the stock market. It would be a terrible time to bet against the stock market. Terrible time to bet against the stock market. However, you're still locked in your houses. I also think it's an interesting time to try to buy stocks. I'm not sure which way to go. I'm not buying any stocks today. I'm not saying I hope things get worse, but I'm hoping the market goes down a little bit so I could buy some more. I'm not sure I'd add to stocks here. If you look at the market today, look at Visa. If you look at Visa and Arthur, whenever your dad bought, he's probably a genius. Smarter than me. Smarter than me. Because I'm still holding most of my investments, but I haven't added anything new. And I probably should have 2 weeks ago. So if you look at Visa for the past year, Visa's now at 174. Last June, it was at 174 for the first time ever. So you're literally like 10 months ago. Okay? So I would be very cautious because the market has rallied quite a bit. But if you've got money to start putting some in, you can buy a couple shares. And then if it goes down, buy a couple more. It's called averaging down. When you want to buy stocks and they go lower, you average down. Okay? Ivan, I've got 1,000 people here asking questions. So don't be rude, but repeat your question. What was your question? Mirza said Tesla is a good investment. You'd have to do some research. You would have Tesla, the car company. You would have to decide whether or not you think Tesla is healthy financially. You'd have to understand their balance sheet. It's not as easy as you guys think, just buying a stock and it goes up. That's not how this works. The past week it has. You bought anything and it went up in the past 5 days or 7 days. All right. But so is Tesla a good stock? So Ethan, there's two types of research that you'll have to do. One is, let me get a color. One is called fundamental, and the other is called technical analysis. Fundamental analysis is things about the business. Fundamental analysis are things about how their finances are. What products are they releasing? Okay, Ivan, I don't understand the question. What stock markets do you suggest? What do you mean? What stock markets? Benny, technical analysis. So technical analysis, we're talking moving averages. We're talking the MACD. We're talking trend lines. Okay, those are the two types of analyses. I would definitely suggest start doing research. You can't randomly start throwing money at random stocks. So the best way to buy stocks, Robinhood is okay. TD Ameritrade is okay. There's a company called Webull, which is okay. I assume. I've never used it. Sigfig, SIGFIG. Who else is there? Charles Schwab, who just bought TD Ameritrade. You can use them also. There's a lot. There's a lot of companies you can buy them through. Okay. Fidelity's good. William said if you sell options, you're always collecting a premium, regardless if it's a put or call, but I could be wrong. If you start writing contracts like that, you can go broke, William. So to people that actually know options in here or interested in options, unless you already have those shares in your portfolio, please avoid selling calls or selling puts. That is the quickest way that you guys can really lose everything you have. Okay? Options are definitely not a wake up and give it a try thing. It's definitely not join a random chat group and just blindly do what somebody tells you to do. It can work. You can get lucky. You can also make huge mistakes. That's also why that's the risk money you use. Okay. Buying on margin. So margin means you don't have the money. Okay? So I took margin off of my accounts. Buying on margin means you don't have the cash in your account, but you have the net worth. It's almost like a loan. Working on margin is as if you have a loan. Margin is terrifying to trade on and invest on. Vanguard, I have no preference. I don't really care. Okay, but buying on margin is extremely, extremely risky. Grisham, does that make sense? All right. Professional traders do it. High school kids probably shouldn't do it. Simple. The average adult like me probably shouldn't do it unless you understand it and you're hedged and you can actually read the markets and you have inside information. You can make educated decisions. Okay, so I don't know what the FIRE movement is, Millie. Roth IRAs. There are different retirement accounts. Roth IRAs, traditional IRAs, 401ks, pension plans. We just covered this in my VE class. We just covered it. If you guys want some information on that, let me see if I can upload something for you really quick that you guys can screenshot. Hold on one second. Downloads, retirement accounts. All right, I'm gonna open up something. I will need you guys to screenshot this. And then, all right, you'll do fundamental technical analysis. There's your retirement accounts. Guys, screenshot this right now. I'm going to close it, so just screenshot it. If you have questions on your 401k, traditional IRA, Roth IRA, pension plans, this can jumpstart your research. All right? This would be a great place to start to learn about different retirement accounts. You can invest inside these retirement accounts. Yes, you can. You don't have to have a personal account. You can use your retirement funds to invest. Obviously, you have to have a job and a retirement first. But this would be a lot of information that people have and people need. All right, so Tyler has the PDF if you want it. He just put it in the chat. Thank you, Tyler. And then this is your retirement account. Okay, so Millie said they said invest 50 to 75% of your money so you can retire at 35. Yeah, who told you that? I'm not sure that those numbers add up. I'm not sure those numbers add up. If you save 50% of your money, it depends on your salary. It depends on your return, right? It depends on how much money you're earning. So if you, I mean, I'll tell you this, if I put all my money into Apple instead of other stocks, I'd have like $5 million. I still can't retire on $5 million. Okay, I'm not going to read Dave Ramsey. That's not my thing. So that's just not going to happen. Sorry. I do not support what he does. You guys can watch him. I think it's fun to watch. It's fun to look at. It is terrible investment advice. It's good TV, but it's also what makes people lose a lot of money because then people want to be him. Sorry. My opinion on day trading, I don't have one. You can day trade if you want. I'll tell you what, guys, if I was an expert at day trading, I wouldn't be a teacher. I wouldn't be doing live sessions for you, right? Anyone that's on television, right? I mean, if they were doing this, don't you think they'd be doing this? So just be extremely cautious, please, with what you use as a source and a resource. So my opinions on day trading, you can do it if you want to take the risk. I do very little of it. It is a risk. Every company, Ivan, is risky as a resource. Even TD Ameritrade is risky as a resource. Even CNBC is risky as a resource. Everyone has a thought. Like I can sit here and tell you to buy Apple. Of course. I own Apple. Of course I would tell you to buy Apple. I believe in the company. I believe in the products. I believe in the ecosystem. I love the dividend. I still have an agenda where I want other people to buy Apple because I think it'll make them money, but also because if you buy it, the price goes up and I make more money also. So everyone's a risky resource. If you watch and listen to people that give you advice, they've already done that, right? So if you go to Yahoo and you start reading articles, well, the article you're reading that's telling you to do something, 1 million other people already did that. So you're trying to be, so already check this out. I'll draw you something clever that might help. So I'm going to do a new share and give you a whiteboard again, right? This is you, right? You are trying to be, right? So here is the big fish, okay? Who are these big fish? Who are these big fish in the real world? Real world, who's these big fish? Corporations. So these are your big banks, your large hedge funds, all right? Your CEOs of major companies, your senators and congressmen that have inside information. This is them, the big fish. Then you have the medium-sized fish, which are your smaller banks, smaller hedge funds. Then you have your little fish, and then littler fish, and littler fish, other fish, littler fish. All right? These are all fish. You are not trying to be that fish. That's all you're trying to do. You guys can't see my screen? I drew all over it. Okay, who can't, hold on, resume share. Can you see my screen now? Okay, big fish, little fish, medium fish. So you are not trying to be the last fish. That's all. You're not going to be this fish. Sorry. You're not a major big bank. You're not. You're trying to be somewhere in here. This is where you want to be. This is not where you want to be. And if you don't do the research yourself, this will be you all the time. Okay? Questions on that? This is the best way to put it. You got the super large, you got the large fish, the big fish, the medium fish, the little fish. You're probably going to be the little to medium fish for most of your life. Unless you become a big hedge fund manager or you have some inside information from some inside people you'll probably make most of your decisions from the small to medium-sized fish position, which is scary because by the time you make your decision, these people already made their decision hours, days, or weeks ago. Millie just asked a question. Isn't it illegal to have inside information? Yeah, I guess. I would say I'm a small to medium fish. And that's just because I don't have major contacts. I just kind of know more than beginners. I'm no expert. Again, if I was an expert, I'd be working on Wall Street, not teaching high school kids. Let's be real. Thank you, Mr. Seiler. I wish I had this class as a kid too. I wouldn't be a teacher. I'd be working on Wall Street and I'd be one of these big ass fish right here. Sorry for the language. Okay, so is inside information illegal? Arthur, the real answer is yes. The other real answer is no. Okay, inside information, as long as it's public somewhere, it's not illegal. The problem with the little fish is the little fish don't know where to get the information, or they get the information too late. So there is a lot of illegal things you can do if you get inside information first, like Mark Zuckerberg knowing something and doing something before anyone else in the world knows, that's illegal. If Mark Zuckerberg, announced something and it was public, but not a lot of people found it, well, that's no longer illegal, is it? Because it's public. Not my fault you couldn't find it. Right, that's insider trading. So, Ganapathy, sorry if I pronounced your name wrong. Should I be cautious of stocks that are only up because of the coronavirus outbreak? Okay, so the coronavirus outbreak, what are we talking about? You're talking Johnson & Johnson, great company, great stock. Walmart, great company, great stock. Gilead Sciences, I owned it, I sold it. Costco, great company, the stock's down today. So it depends on the stock. What would I be cautious of? Dick's Sporting Goods is up like 50% in the past 2 weeks. That scares me. Because a lot of Dick's Sporting Goods stores are going to close. Macy's is up 30% in the past 3 days. A lot of Macy's are going to close. Okay? Netflix, great stock, a lot of debt. So Netflix scares me. They got a lot of people signed up because they've been home, but they have a lot of debt on their balance sheet. So Netflix can definitely go up. Netflix can also go down if all this debt has to get paid off soon. Zoom, I've traded Zoom. I don't own it right now. I shorted it. I bought calls on it. I don't own any of it. I think it's a great platform. We're using it right now. I've used it for a decade when I was teaching college. I taught at an online university. We use Zoom. Here's my problem. Why the hell hasn't Google come out with their own Zoom? Apple already has FaceTime. Why hasn't Apple done this? Yeah, Hangouts is terrible. You guys know Hangouts. Google Hangouts is trash. Google Duo is trash. Google Meet that they're pushing now, trash. Like, these are not great platforms. Okay? Twitter has millions of people that use this every day to talk about investing. Why can't you Zoom on Twitter live? Why can't I have a group? Why can't I have a Zoom group right now live on Twitter? And that's the thing. So FaceTime is mediocre. The Google platforms are mediocre. Discord is underutilized. If I'm Amazon or Google, I'm buying Discord and I'm going to leverage it with video conferencing, and I'm turning it into something that can be used by major corporations, similar to Slack and Microsoft Teams. No idea why they're not doing it. So that's the next thing. If Google launches or Apple launches something huge, goodbye Zoom. Because I'd rather integrate into my Google Gmail account than have a separate account for Zoom and play with that. Okay. Other investment questions. I know we've been on this for just about under an hour. Any questions? Okay, so good people to watch. Okay, so good books. So here you go. Let me give you some books. Some of my favorite: Rich Dad, Poor Dad, right? Creative Planning. That book was 5 Mistakes Every Investor Makes. Okay, so you want to talk day trading? Pete and John Najarian, I follow them. They do a lot of options books. You can check into anything they've written. I actually met John a couple of years ago. Great guy, kind of quirky, has a lot of money. And he donated like 100 books that we were giving out for the past couple of years to our VE students. Again, to my VE kids, I'm sorry, they're sitting in a closet. Once we're back up and running as a school, whether it's June or September, I'll ship you guys some, okay? But you guys are home. Like, Jesus, you guys are home. Read some of this stuff. I got so much slack yesterday. I wrote on Facebook that anyone who doesn't leave their house in 2 months with a new skill or new knowledge is a below average person. And I got ripped apart on social media. Oh my goodness. Now, I understand people have kids. I'm still working from home. You know, there's other things. But you can't tell me that you're home all day, all night. You can't learn one thing. I don't need you to learn a lot. One thing. You can't read like 10 pages of a book every night. You can't read 2 pages a day. 2 pages a day. And in a couple weeks, you'll finish the book. So I would challenge you guys to start doing some research. If you're already here for this class with 130 people, I challenge you to read some of these books, order them off of Amazon, right? Ivan just said, what should I watch out for when investing? Well, I'll tell you what, I got $20,000 stolen from me while investing. I'll tell you why another day. So yeah, it's the below average thing. That's why people got mad, Harrison. So here's how you lose money. There are liars and cheats everywhere. There are people that will try to game you. Okay? There are people that will try to scheme you. They're scammers, right? So, regretfully, I got scammed for a couple of Bitcoin like 3 or 4 years ago. I was involved in a group. We did some things with Bitcoin, with mining. Oh, forget it. And I actually got 2 Bitcoin, got them stolen from me, never got them back. Pyramid schemes. There's some other schemes. Those are crazy. All right. A lot of you will probably get involved in pyramid schemes at some point when they tell you to, refer a friend. Oh, wait, hold on, guys. There's a new pyramid scheme right now. I downloaded the app, then I deleted it. This is the app. Please don't do this. Man, which one was it? It's a savings account where you have to invite people to join the savings account, and then they will increase your savings rate on the savings account. Okay, so just be careful. There's a lot of schemes out there. You've got to do some research and due diligence. Setting up your own algorithm and algo trading. Tyler, that was not a Ponzi scheme. That was not a Ponzi scheme. I'll explain the Ponzi scheme in a minute if you really want me to. Algo trading is good if you have a good algorithm. You know, you can buy one, you can write one, you can use one and use all the trading patterns that, you know, Thinkorswim gets you. Michael Lanos asked me about gold. It's a great investment if you think the economy is going to continue to go down. Coinbase.com, a Square account. Those can be where you buy Bitcoin legally. Square Cash. or the Cash App, which is owned by Square, and Coinbase can buy Bitcoin. Thoughts on gold? Gold is a hedge in case you think the economy is going to go down. Gold is a metal. I do not own any gold. I sold a lot of gold because when we got the trade deal with China, I thought the economy was going to improve drastically. It did, and I was correct for like 3 months. And then the virus hit, and the economy took a nosedive, and gold blew up, right? So one popular ETF is GLD. GLD is a great gold investment. I sold all my GLD, regretfully. Wish I had it now. Would I start adding to gold is a question. That answer is probably no, personally. So, Mike, I wouldn't. And the reason why is because you've got the Fed throwing $10 trillion at the economy. So if stocks are going to continue to rebound, you would want to be in stocks, not in gold. Now, could you buy gold if you thought that the economy was going to take a nosedive? Sure. I don't have any. There are a lot of people that say to own gold no matter what. You could. You definitely could. And just have it there just in case stocks go down, gold will go up. There, it's an inverse relationship, right? It's an inverse relationship. So stocks go down, gold goes up. That's just the way it works. Stocks, GLD. More or less, Michael, yes. Gold usually goes up when the economy tanks. I could just say yes. It's the easiest way to say it. All right. Dennis and Ivan, TVIX. You guys tell me. You guys are asking a question. What's it stand for? I assume it's got to do with the VIX. I don't trade the VIX. So I don't trade the volatility index. Okay. So here's something important. And again, listen to me closely, guys. If you're asking someone questions, do the research first. I know that's why I'm here today, but in general, you will end up being the person that gets uninvited to group chats if you ask questions that are easily found on Google. So like if you're trying to create an investment group or you're trying to create friends to have these conversations, or you come into VE as a senior, Mr. Powers, how do I buy and sell stocks? Well, that's the craziest question you could ask someone, because you can throw it into Google and you don't have to ask me that question and waste my time. Right? So you guys have to do your own research to start off on these conversations. Otherwise, when you ask the questions, people won't take you serious. They'll think you're somebody that just wants someone to spoon feed you and you're not willing to do the work. So be careful when you're involved in groups or when you ask a question to someone, and this can be any class. You guys just got to be super, super duper cautious. Because if you, like you guys are asking me, what's TVIX? That's great. Tell me, what's it stand for? I don't know. Well, then why are you asking me? All you have to do is exactly what I'm about to do. I'm going to Google it. I'm going to literally type into the box. All right. So it's the Velocity Shares Double VIX Short-Term Fund. Right? My thoughts on it, I have no idea. Dennis, I have no idea. What are your thoughts on it? I haven't traded it. I haven't tracked it. I haven't followed it. We can look at what it's done. It clearly tracks the VIX to a degree. Skyrocketed in March when the VIX blew up. It's been trending lower ever since. I think volatility is done. I don't think we're going to have crazy, insane volatility anymore. Why? Because everybody already threw out all the trash they had. Everyone already lost their minds. And now it's going to be a little more calculated, the trading that gets done. Yeah, so paper trading is easy. Paper trading is, it's not real money. You can make a paper trading account, okay? You can make a paper trading account with almost anyone. TD has a paper trading account. The stockmarketgame.com has paper trading. And you can just, you know, if you're underage, you can start to learn and track it and follow it. And it's called paper trading. They give you fake money. Yeah, the VIX was great for day trading about 2 weeks ago. If you're trading the VIX now, there's not enough volatility to really trade the VIX. Alyssa said, where's the video posted? I don't know. Mr. Seiler, are you still here? I'm going to share all 3 videos on YouTube. And then I will send the YouTube links to administration. And hopefully administration shares it with you guys. Hopefully. Okay. Michael Madden says, my dad's going to drop money into the stock market when Dow hits 15,000. That is never going to happen. My opinion. You're at Dow 24,000 right now. Again, the Federal Reserve, Chairman Powell, threw upwards of like $10 trillion into the markets. They are not letting the Dow Jones hit 15,000. They're just not. If it was going to hit 15,000, it would have happened already. Since you have had such a strong rebound, if the market takes a turn lower, it could go back to 20,000, 19,000 maybe. If you're lucky, you're not hitting 15,000. I don't even think you get lower than 20,000 again. I don't think you go lower than 20,000 if you even go that low. Okay? So if we look at the Dow Jones, this is the Dow Jones right now. This is the past year, if you guys want to take a gander. Okay, so I have some moving averages on here. I'm just going to remove them so it's easier for you guys to see. Okay, so here's the Dow Jones, okay, over the past year. Here's the Dow Jones over the past 2 years. Back around Christmas 2018, we hit 22,000. We dropped on March 16th to 19,000. Now we're at 24,000. You will not see 19,000. Oh, hold on, sorry. I keep thinking my screen is shared. There we go. You guys got me now? So I'll just annotate real quick again for you. Okay. So this was the Christmas crash of Christmas Eve. Huge, crazy drop. Right. In the matter of a month, we went from like 26,000 to 22,000. That was scary as hell. All right. This is where we were last week. This was 19,500. This is where we are now, 24,000. You will not see 19,000 again. Pretty sure you won't see it again. I'm sorry. I wish we would because I'd love to buy more stock. I didn't buy any. I actually sold a bunch of stuff right about here because even I got shaken. And I was like, oh, damn. So I should have bought some. Instead, I sold some. And then I never got the opportunity to buy it back because it bounced like the next 2 days. It started bouncing. And then I waited for it to pull back again. It never pulled back. It's been bouncing higher ever since. So stupid. As goes life, right? So I don't think you see it. Harrison said the best time to buy stocks when it hits the all-time low. Yeah, but if you think it's going to go lower, you try to wait. I thought it was going to go lower. I waited. I was wrong. It happens. Right? So look at the 5-year chart. You know, 5 years ago, we were at 16,000. Does it matter who you open an account with? Nope. You can open an account with anybody. Grisham said, if the Fed rates, so the rates are currently at 0. Rates are currently at 0 to 0.25. The federal funds rate is 0 to 0.25. okay? It's been there for the past month. So, I mean, companies are already taking out loans. They're already trying to grow their businesses. They're already trying to rehire their people. That's the best I can do for you. All right. But there's your market for the past 3 months. There's the past month. There's your drop. 29,000 to 19,000. Wow. Back up to 24,000. I mean, you've got a pretty nice runway here, though. If you want to try to get some stock that's going to go back up and fill this gap, right? But does the world go back to normal? I don't know. I don't know how quickly it goes back to normal. I don't know what happens next. Nobody does. It's an educated guess. Other questions before I let you guys go? We've been on here for a while. I mean, I can't teach you guys everything in the world. I've been teaching investing in stocks and retirement accounts and reading charts and technical analysis and fundamental analysis, like on and off for the entire year for the VE seniors. I mean, I can't teach everything in an hour or 45 minutes. So, Millie, your 401k, I mean, if you have a 401k through your job, I would put as much as you're comfortable. So putting money into your 401k is putting money into a retirement account, which means then it's not liquid, so it's not in a savings account, right? It's in a retirement account that you theoretically should not access. Therefore, if you're making $50,000 a year and you're living at home and you have very little expenses, max it out. Max out your 401k. Your max contribution this year for 2020 is $19,500. Max the hell out of it. Put it all away. I doubt you guys are making 50 grand a year. So as of right now, I'm not sure if 401k makes sense for you guys if you're 16, 17, or 18. Right? You probably need more money in your savings account than anything, if that makes sense. Okay? All right, other questions? I apologize we couldn't go into like crazy detail because I know that, you know, there's so many of you here. We had 200, now we're down to 80. I can't teach you guys like technical analysis and fundamental analysis when we're still trying to go over certain places to buy and sell stocks in. But are there any other questions before I let you guys go? I would say please just remember, be cautious. Please just remember that when you're buying, make sure you have money in your savings to be safe. This may sound grim. Can we invest against the country economy? Hell yeah, you can. You can bet against the economy. You can buy stocks in foreign countries. You can buy gold. Gold is a bet against the economy doing well. If you know options trading, you can buy puts. Puts are options where you think the economy will do poorly and companies will do poorly. Millie's asking me now, stocks or real estate? So I'm looking to buy real estate now. I still have my core stock holdings, but real estate, I don't own any, and I want some. Do I think today's the best time to buy real estate? No. There's a lot of people that are losing their jobs. If there's a lot of people losing their jobs, there might be a lot of people not buying homes. If there's a lot of people not buying homes, then maybe housing prices go down, which means instead of spending $500,000 on a house, you can spend $450,000 on a house, and you just saved 50 grand. Right? Sammy said, what's a good indicator? You can use moving averages or the RSI. As you can see here, I have my RSI down here, right? I use moving averages, and I use the RSI. use the MACD, and I use the RSI. If you want to know what the MACD and RSI are, or moving averages, might take a little bit more research on your end. But those are some that people use the most. All right. We do cover much of this in VE, but don't come to me in VE in September and say, Powers, teach me how to buy stocks. That's not going to happen. When you guys start VE, you have to run your business. You have to learn to be a professional. You have to learn not to be a high school student and learn how to be an adult, right? You have to learn how to manage your money. You have to learn how to manage your time. You have to learn how to work with others. You have to learn how to take criticism. You have to learn how to learn, some of you. All right? So the first few months of the year, we don't even discuss investing. You will learn economics, which will in turn also be important to your analysis of buying and selling stocks. So questions on that? If you aren't in VE, I would definitely apply today, though. It's very important. All right, guys, I'm going to go. I am going to record these. They are recorded. I'm going to try to share them with Mr. Seiler and Dr. Marmer. I'll put them on YouTube and then share them the links. And then, you know, how we get them to you guys is out of my control. Ethan's question about applications for VE. If you're a freshman, you can just tell your counselor you want to be in the 3-year sequence. And if they give you a problem, let me know. If you're a sophomore and you want to be in the 11th grade class, because it's a 3-year sequence, you can tell your counselor, if there's a problem, let me know. If you're a junior, you will need to apply with the link I gave you by midnight tonight, because tomorrow I have to read through every single application. And then tomorrow I have to make my recommendation to guidance on who gets into the VE program. So if you're a junior, you have to apply. If you're a sophomore, you can just tell your counselor to put you in the 11th grade entrepreneurship class. If you're a freshman, you can just tell them put you in the 10th grade class. Benny, I believe I have your application. I believe I saw it last night. Email me, yes. Email me to make sure that I have your application. But I believe it is there. I believe you came to see me, actually. And I think I remember seeing your name. I'm not going to share my YouTube channel. I'm going to let the school go through their channels or their sequence of how they want to share these links. Okay? Guys, thanks for coming. I think it was a great conversation. I think it's a great jumping point for you guys and a great starting point. Looking forward to seeing some of you guys next year. Thanks for being here. All right? Use this time wisely. I know you guys got some work to do, but for the next week, I believe there's no Zooms, and I believe all you have is whatever classwork you were already given. I mean, hell, use this time wisely. Okay? To my current VE seniors, you guys have my contact information. If you guys have real questions, reach out to me. All right? For our VE seniors, we have our Discord group. If you guys do want to discuss this more, that's why we made the Discord group. Okay? If you are not in VE, I'm not going to add you guys. I apologize. It is VE only. So if you want to be involved, then heck, better join next year. All right? Outside of that, if you are a senior, I suggest that you guys continue to educate yourselves and use this time and see maybe your peers that are in VE can help you out also. All right? But I can't wash out the Discord group with hundreds of other students asking questions that we covered back in November. So I apologize. All right, guys, have a wonderful day. And, be your best versions of yourself when you get out of this thing. I'll see you guys on the other side.